So, it is February 5th, 2026. The headlines are, while they're pretty much all freaking out about Bitcoin's flash crash back to the $70,000 mark.
They are.
But we're going to look past the panic today. We're digging into this report from MINAS Academy. They're calling it the $70K reset.
Right.
And our mission really is to figure out if this is a market failure or if it's more of a calculated cleanup.
And what's fascinating to me is the sheer volume of that cleanup. I mean, we're talking $775 million in liquidations.
Wow.
Just boom, hitting the market almost all at once. Now, if you're just watching the price ticker, that looks like a total collapse.
Of course.
But if you look at the plumbing of the system, it's a really violent but necessary purging of these high leverage positions. It's the market's way of just removing the gamblers.
To people who are overextended.
Exactly.
Right.
Which, counterintuitively, actually makes the floor more stable for everyone else.
Okay, I hear that healthy correction narrative a lot, but let's be real for a second. If nearly $1 billion gets wiped out in a few hours, doesn't that mean the foundation is just incredibly brittle?
That's a fair challenge. It really is.
Why should anyone trust that the 200-week moving average is going to hold when you see red candles that aggressive?
Well, the reason that specific average is like the line in the sand for institutions is that it represents the entry price for the most disciplined capital out there.
Right, the long-term players.
Yes. And historically, when we stay above that line, we're in a structural bull market, regardless of the daily noise. The MINAS analysis points out that we haven't even poked through that support.
So the smart money isn't even flinching.
They're not looking at the $70,000 price tag. They're looking at the fact that the long-term trend is completely intact.
Okay, so speaking of smart money, let's talk about the irony here. While retail investors are panic selling, MicroStrategy is reportedly planning a $21 billion stock raise to buy more?
It's a massive number.
Yeah, so if the exit sign is flashing for the average person, why is a giant like MicroStrategy treating this as an entry point?
I mean, it's a total divergence in time horizons. Retail is reacting to the immediate fear, to the ceiling. MicroStrategy is playing a multi-year accumulation game.
A different game entirely.
But that does raise a different question, right? Does a $21 billion raise by one player create a centralization risk?
Oh, interesting.
The Great Reset might just be shifting power from thousands of individuals to like a handful of corporate balance sheets.
And that actually brings us to what MINAS Academy calls the meanest pillar of security. Their argument is that at this price point, the biggest risk isn't the dip.
No, not at all.
It's the convenience tax of where you're holding your assets. Leaving your crypto on an exchange right now is, well, it's an existential risk.
Exactly. When markets get this shaky, platform stability is the first thing to go.
Yeah.
If you aren't practicing self-custody, holding your own keys, you're basically just a line item on a spreadsheet that could be frozen.
Or hacked.
Yeah, during a period of high traffic.
Yeah.
We're at a point where the risk of an exchange glitch just outweighs any benefit of being able to trade quickly.
So stop checking the price every hour and start checking your wallet type.
Yes. This is the moment to move from a hot wallet to a cold offline solution. It's not about whether you can sell. It's about whether you actually own what you think you own.
It's the difference between gold in your safe versus a piece of paper that says someone owes you gold. So looking ahead, MINAS isn't just seeing a reset here, they see a launch pad.
They do.
They're saying if the $70,000 floor holds, the path to $130,000 by Q3 is wide open.
And that's because the $70,000 level is a massive psychological battleground. If the market can absorb all those liquidations and stay above that average,
It proves something.
it proves the asset has matured. We're moving from a market driven purely by hype to one driven by real institutional strategy.
So the takeaway here is that volatility is a tool, not just a threat. This great reset is a signal to maybe stop gambling on the hourly charts and start focusing on a long-term security strategy.
Ownership is the only real hedge against volatility. That's it.
And here's a final thought to mull over. If Bitcoin really is digital gold, why do so many of us treat it like a lottery ticket the second the price dips? And more importantly, if you aren't holding your own keys, do you actually own the gold? Or are you just holding a promise that could be broken when you need it most?